What's going on, guys? If you watched my last video, I gave myself a portfolio audit. I went through all of my investments that I had since my first quote unquote big YouTube video, the first portfolio tracker that I posted. And I compared all of my investments to the S&P 500. If you just took all of your money and threw it into an index, how much would have you made there, which was 35%. Compared to my portfolio, which was 23%. Very humbling looking at it. And the reason why I did that is because I feel like it's time to change up my investment strategy. And obviously, I want to tell you guys about that to whether you want to follow along or just learn from it, learn from my mistakes, from my experience, from some of my successes. There were some stocks that did better than the market, but I am changing up a lot. I'm not sounding the alarm saying it's time to sell. I could have said that back in December of 2021, but I didn't. I didn't realize that we would have had a pretty nasty correction. If you guys don't know what you're looking at, why do I have 35% in this red line? Check out the other video where I actually go through the audit of all of my investments. I think it's a pretty humbling video, and you may appreciate it. But yeah, in a sense, I'm sounding the alarms. But also not really, because who would have thought the market would be up as much as it is this year? We don't know what's going to happen in the future. We could tank and see lows, or we could just keep riding higher. But after just experiencing the emotional roller coaster ride of the past couple of years, that's why I feel like it's time to change up my investing strategy. Now, I'm not saying dump all of your stocks and forget about it. But if you're anything like me, you may want to start to shift gears, and you now see the true potential of index funds and why they're better than stock picking for the mass majority. There are people who beat the market all day long, but you are looking at its survivorship bias. You're looking at a very, very small percentage that have succeeded, but you're not seeing how many people actually fail. You have tons of people who are YOLOing into PayPal and Square, and you could see they are down significantly. If you YOLO'd all the way into Square and PayPal back in 2020 when I had that initial video, you'd be down a lot. But I did have a video that purely talked about NVIDIA, how I thought it was a great investment. And if you watched that video and said, let me just put all my money into NVIDIA, you'd be really happy right now. But that's gambling. Just putting all your money into one investment, it's a massive gamble. You have no clue what will happen in the future. NVIDIA could go up another 1,000%, or it could crash into the ground. And again, just take my experience and plenty of other YouTubers' experience or investors' experience and apply it to your own strategy. So here is the switch up. The indexes, I'm going to, and not just all of them are indexes, but the indexes that I'm going to start to invest in and really focus building that up. The first one, again, S&P 500 is a great option, but there is one that I like a little bit better, and that is the VTI. Jumping between TradingView and Seeking Alpha, but I think Seeking Alpha will paint a better picture when looking at indexes. So what is the VTI? It's the Vanguard Total Stock Market Index Fund. I did put out a couple of videos of it. It is one of my biggest investments now. So that's why I wanted to make this video, to tell you guys that it's not my biggest investment. My biggest investment is not an ETF. So make sure to stick to the end. But if you followed me, you probably already know what it is. But this is my second biggest investment, the VTI. So it is not only the top 500 stocks in America, but let's jump over to holdings. It is all 3,886 holdings. So I like how it's every single stock in America. Investing in this, you are truly investing in America. Not just your large caps, not just your S&P 500, not just your NASDAQ. You're investing in every single American stock. But you can see right here, the top 10 holdings are going to be very, very similar to the S&P 500. You got Apple, Microsoft, Amazon, NVIDIA, Google, Facebook, Berkshire Hathaway, Tesla, and United Healthcare Group. Those are your top 10 holdings right there. So if you were to take $100,000, park it into the VTI, it's also like if you were to buy $6,530 worth of Apple, $5,999 worth of Microsoft, and you guys get it with the percentage. So it gives you great exposure to America. You could see 27% is to technology because technology is kind of the heavyweight champion this year. So that's why it's so high. But what's really nice about the VTI and why so many index fund investors beat stock pickers is because there's no work involved. You put the money into this, Apple's the winner this year. Let's say 10 years from now, it's not Apple, it's some new company, some AI company or whatever. That's the new top stock. Well, you're already invested in it and you didn't have to make a single change because the index does that for you. Whether it be every year or every quarter or you name it, but it'll be rebalanced to match the market cap of all of these other stocks that are in America. So if you were to rewind 10 or 20 years ago, well, how about 20 or 30 years ago? This was not the top 10 holdings. You had ExxonMobil, you had IBM, that was in the top 10 because that was making the most money for America at the time. And you were getting that benefit. Not only were you getting the appreciation in that stock, but you were also getting the dividend. So this is my second biggest investment. Next, I love the Qs. It is definitely more volatile. If you're not someone that can handle these massive swings, you may want to stay away from the Qs. But the Qs is just essentially a more volatile S&P 500 because it is very heavily in the tech sector. So here you go. Technology is 50%. This looks almost the same as the VTI or the S&P 500, but you can see there's a couple of different ones. You got Broadcom, PepsiCo, because it's not just all tech stocks, but this is going to be your higher volatile bet. And because of that, you're going to have bigger swings. You could see, let's see, if we go, the past 5 years, it had a dip, or I may be better off jumping over here. So you could see the SPY from its peak all the way down, it bottomed out around negative 24%. So this was from 2021 and then late 2022, it bottomed at negative 24%. And then if we look at the Qs, much more volatile, it had a drawdown of 36%. But if we look year to date, let's jump over to percentage. We're up 41% for the Qs. The S&P 500 is up 17%. So it's a lot more volatile, and over the long run, we could see some massive gains. Over 10 years, it's up 409%. Something like the VTI or the S&P 500 is only up 156%. So I want some exposure to that, and it is going to be a significant part of my portfolio, but definitely not the biggest one, and definitely not the second biggest. The second biggest is VTI. You're still waiting to hear about the biggest, but I want some exposure to the Qs and a decent amount, especially me being young. I have time to ride it out. If we have another 2020 crash, the dot-com crash, take a look at the dot-com crash way back in 2020. Jump on TradingView, and it was a nasty bear market for I think 17 years. That could happen again, but that's why I'm not putting all my money into it, but still a decent amount of exposure. The next one, and this will be more for my IRA and 401k. So you should know the difference, why you should have an investment portfolio, like a regular taxable brokerage account, but then why you should have an IRA, 401k, Roth IRA. This is one that's going to be in my Roth IRA to get that nice dividend yield and not have to pay any taxes on the dividends, especially in the Roth IRA. This is a great dividend ETF. It's made up of a bunch of different US companies, but you can see we have a bunch of companies that you did not see in the VTI or the S&P 500 or the Qs. So it's just a really nice dividend ETF to hold and eventually be a nice form of income when you're ready to retire. So because of that, I'm definitely going to be adding some of this to my retirement portfolios. Along with, it's smart if you're talking about diversification, don't just stick with American stocks. You want some international exposure. How do you do that? Well, you could buy an index fund. So there's the VXUS. So this is pretty much every single stock in the world minus the United States. So this covers my international exposure. Has a decent dividend yield right now of 2.87%. But if we just peek into the holdings, they're probably companies you've heard of. So we got Taiwan Semiconductors, we have Nestle, we probably all know about Nestle, Samsung, Tencent is the parent company of TikTok, LVMH, Shell. So these are big international companies that you probably heard of. You may have a Samsung phone, but you can't buy this on the American exchange. So how can you own some Samsung? Well, you could buy the VXUS. Great international exposure, especially every 10 years. It seems like it'll flip. America will be doing good and beating out the international stocks. And then the next 10 years, the international stocks will be doing better than America. And they'll flip flop back and forth. Doesn't mean that's going to happen over the next 10 years, but I definitely want to have some international exposure. Now, next is that pretty much wraps it up for the ETFs. Next, it's nowhere near my biggest one. This is just a small amount, and I figure, you know what, with inflation and everything, I do want some gold exposure, not a whole lot, but I figured, hey, why not add it, being a little bit more diverse. So you could actually buy it through a ticker symbol GLD. So if you have that, you have some gold exposure. It is paper gold, but hey, $181, maybe I'll throw a few $1,000s into it and let it ride. But this always underperforms the market over the long run. You can see the past 10 years, it's only up 45%. The VTI is up 156%, and the NASDAQ is up, that's the max. Let's go to 10 years, 409%. So I don't want a whole lot of exposure to gold, but I figured, you know what? Let me throw a little in. And then on top of that, let's add some silver as well. Over the past 10 years, you can see it's only up 20%. Not a lot. So again, not a big position in my portfolio, maybe a couple $1,000s, and then that's it. And now I'm not going to reveal the number one investment. Before that, we're actually going to jump to, I'm not adding to this one yet, but it is on my watch list, and that is O, which is a Realty Income Corp. This is a REIT. I have put out a couple of videos on REITs, so I think this is definitely a good one to keep an eye on. It is in a pretty bad bear market right now, but I would like it to kind of throw up a little bit more. We all know real estate is a mess right now, especially if you're trying to buy a house. But even worse than residential real estate is commercial real estate. That is a complete mess. So I figured, you know what? Let me see how this plays out. Maybe this could really dip lower. Maybe we could kind of get to the 2020 lows. And then if we can get around, say, $50 or $40, I'm definitely going to be picking up some ticker symbol O. You can see it is at 5% for the yield right now. We drop down to, say, $40, then the yield's going to be really attractive where I'm just going to have to pick some up. It is a monthly dividend, which is really nice, but this is one that, again, not financial advice, but I would highly recommend, if you're asking my opinion, hold it in a 401k or a Roth IRA or a traditional IRA. Do not hold it in a brokerage, a taxable brokerage account, because you actually get taxed at your income level. You don't get taxed at the qualified dividend level or anything like that. So that 5% is going to be taxed at your income level. So if you're paying tax, say 35%, this is also going to be at 35%, whatever you get for the monthly dividend. But you park it into something like a Roth IRA, you will be paying 0% on taxes for this. So keep that in mind. And now the number one holding that I have, some people may call me crazy for it, but whatever, is Bitcoin. You probably all know I'm a Bitcoin maximalist. I don't hold any other cryptocurrencies, just Bitcoin. I think Bitcoin's all or nothing. So I figured, you know what? you might as well hold some because there's only 21 million. So get your hands on some Bitcoin because who knows? This could go to zero. And if it does, it's not like it's the mass majority. It's just my biggest position, whether that be 10, 20%. If I lose it all, I lose it all. But I don't see it going away anytime soon. And mark my words, we'll see what it looks like 5 years from now. But this is my biggest position. And I do have plenty of videos on how to not only invest in Bitcoin, but then how to self custody Bitcoin, which I believe is very important to learn if you are going to hold on to Bitcoin. Learn how to self custody. But guys, those are now my new investing strategies. Again, I'm not saying completely ditch individual stocks, but what I'm personally doing is I'm shifting more towards, hey, let me hold on to a bunch of index funds, and not even a bunch, a handful of index funds. I want some crypto exposure. I figured, you know what? Some commodity exposure, a little bit of gold, a little bit of silver, not a lot, just a little. And then, hey, and the opportunity arises where I think, hey, here's a stock that I think is going to be the next Nvidia or the next Tesla. Yeah, I'm more than willing to then throw some money into there, but more of a speculation, not more of a, hey, this is going to get me to retire early. But guys, that is my new investment strategy. These are going to be the things that I'm going to be focusing on for here on out. Let me know your thoughts. Did I miss something that you think would be a good thing to add? You think it's better just sticking with stocks? Or, yeah, just let me know in the comments. But if you like this video, make sure to smash that like button. And guys, as always, I will see you in the next one.